Welcome back to Exit or Die, the show where founders, CEOs, and decision makers tell the truth about the battlefield of scaling and for sure surviving. My guest today is Stephan Lutz, CEO of BitMEX, one of the leading crypto derivatives exchanges and a company that's lived through the extreme highs and also extreme lows, and now the brutal in between of building a crypto business that lasts. Stephan, founded in 2013, BitMEX was once the undisputed number one in crypto derivatives. Today, the company is leaner and sharper and positioned as a focus player in a hyper-competitive market with over 80 million in revenue, in annual revenue, cash flow positive, and a structure that's still 92% founder-owned. So we will talk about the BitMEX restructuring, the shift from mass market to a niche player, and also the company's theoretical position between Series C and pre-IPO, and why BitMEX refuses to play the VC-filled hype game. Stephan, welcome to Exit or Die. So please give us your personal elevator pitch.
Okay. Hey, Peter, first of all, thanks for having me, and I'm looking forward to this discussion, especially as you pointed out already, BitMEX is a quite bespoke animal in the space, right? So the elevator pitch is BitMEX, or the founders of BitMEX, solved the problem when the company was founded. That was their own problem. And it was a problem, in the positive sense of the meaning, not in the German sense of the meaning, that actually yielded something. And this brought the company to being a mass market player. And then in the following years, the crypto markets evolved and matured. And then what we have to offer, and we never compromised on this, is actually something that nowadays is more for a niche. And I'm happy to go into this. So, and the elevator pitch is, we're still here in terms of age compared to the industry. We're kind of a dinosaur, positively. I always make the fun or the joke, if we would be a bank, we would be the Rothschild of this world. Who was the biggest bank at some point in time, or the biggest family of bankers, and now they're a niche player as well. So there are similarities, and usually those similarities are natural in a way, often not seen, but with the ambition to be a privately held company and being fully bootstrapped, this comes at a natural juncture in a way, right? It's a different game that you play, whether you want to have a business to make profit and to solve a problem, or you want to solve a problem to scale and then be the number one, right? And then you have the rockstar fallacy as well, which I always tend to tell people. Like, if you are in the VC play, if you are in the venture play, usually you have one company that really does it, and you have the 100 times return or the 1,000 times return. But no one sees the thousands of companies that don't make it, right? So it's a numbers game, and we're in a very particular spot on this one. So let's dive into
it. Yeah, perfect. Thank you so much. Stephan, BitMEX was once the crypto derivatives exchange, the original, right? So, but in 2020, everything changed. So what triggered the restructuring of the company and how hard was it to take the company from a giant to a focused, leaner player?
I think let me take a step back and unpack a little bit what happened, because then it's easier to explain what actually happened to the company. And it sounds worse than it actually was. So I would say to have the end result already now, we went back to our core. It wasn't so much a restructuring that changed everything. It was more like we went back to where we've been before. So let's just briefly go back. When BitMEX was founded, the problem in crypto markets was, and it was shortly after the Mt. Gox failure, right? Which was the first publicly noted big fraud case, basically, in the crypto industry. So the problem statement for our founders was, hey, we want to trade crypto, but we want to have a venue where we can trust that our coins are still there. They're not gone. Number one. Number two, hey, crypto trading is overly expensive and capital intensive, which is part of the design of crypto. One coin can only exist once. You cannot multiply the coins. There is no like in fiat money systems, which I don't want to go into the ideologic thing, where you can create more coins basically out of thin air, which is not always bad, but you cannot do that in crypto. It's only one coin and that's it, right? That you can move. Then number two is we want to trade with each other, but we don't know each other, right? So at that time when it was founded, no KYC. I mean, it's not a thing of regulation. And the ideological belief was, hey, we want to be permissionless. We want to be able to allow everyone on the platform. So it's about behavior on the platform, not who are you, which country are you from, hey, do you have a regulatory status, etc. Do you have documents, right? It was like everyone who wants can actually, that was the idea, can enter the platform, and then the behavior on the platform determines whether you're a legitimate player, yes or no. But that means there is no counterparty credit risk analysis possible, and everything needs to be prepaid in a way, right? So problem statement number two. Problem statement number three is, okay, it's overly capital intensive for every player. So if I'm just into participate on the movement of the Bitcoin price, I need to buy a Bitcoin. So at that time, if we look back from now, it's like, what? There wasn't a problem. Bitcoin price was so low. What's the issue? But if you compare it to today, the problem statement is the following. If you want to participate on price movement of Bitcoin, you need to buy one Bitcoin, right? So you need to have, let's say, roughly 100,000 US dollars. So, and if you say, I think Bitcoin is going up 10%, you need to pay, in quotation marks, 100,000. And you might get 110,000 back if you were right? So you make 10%. Yeah. And the part is coming from traditional finance and from trading. They're like, wait. There are futures in TradFi. With a future, you can do the same, but you need to only, let's say, deposit your collateral, your initial margin, and then your variation margin, which might be like 5% of the amount. So you would only need to place 5,000 US dollars. Then you can participate in 10% swing, like 10,000. So you make 10,000 over 5,000, which is 100% return, right? Or 200% return, basically. So, and putting all of those three together led to the creation of BitMEX, because BitMEX invented the so-called, I mean, it's then in the perpetual swap, which is like a dated future that's constantly rolling over. Number two, they invented or they designed a wallet system, an audit system that made sure that technically no coin can basically leave this platform unnoticed. So it's not that we have never been attacked, but we could basically fight back all of those attacks. So we say, and I knock on wood, literally, we never lost the coin. And it's not just technical stuff. It's not just coding. There is more to it, right? So we even have a internal campaign that says security isn't a product, security is a practice, right? But you only can lose with that. Number three, it's the counterparty credit risk, right? So it's basically if I go long and you go short and you win, I lose. The moment my collateral is used up, you don't have someone to trade against. So this led to the invention of the mechanisms of the liquidation, of the insurance fund, and all of the things that go together with it. That basically make sure that the lines of defense you have in a big exchange, in a derivatives exchange like Eurex or Chicago Mercantile Exchange, you can mirror and you can do on a permissionless basis. So no capital requirements, no minimum trading requirements, and so on. No contributions to clearing fund, which you have in TradFi derivatives, right? So, and then the last thing is, how do you bring supply and demand, longs and shorts together? Because usually things grow up. Everyone wants to be long. No one wants to be short. This led to the invention of the funding rate mechanism. So, and that in 2012, 2013, basically was adopted because, and it was the market because there was no alternative solution to it, right? So they actually did something that only later became known as this Peter Thiel paradigm. Like, hey, you don't go for competition, you go for a monopoly, right? And they just did. So this is how BitMEX started and how it became the number one in crypto trading. And then a couple of things happened at the same time, and they led to it. So number one was, and this was the visible thing, this is everyone knew. So we had Operation Choke Point in the US, and because we have two founders that are US citizens, BitMEX basically, because it was number one, like on the target list, and they were indicted. I mean, we cleaned everything was fine now. But basically, that stalled the process of further product development, business development. Customers became suspicious, like, hey, will those guys be there tomorrow? Will there be a seizure of assets? And so on, which led to uncertainty. Number one. Number two, with the scaling, this heavy scaling in the beginning, we of course had some issues with our IT. Not like real issues, but if you scale so heavily, so fast, so quickly, of course you need to improve your tech, right? And usually your growth is faster than what you can do on tech level. So led to let's say outages, right? So we had times where the machine didn't work, and then you have customer complaints for the right reasons. That's all okay. We solved all of this as well, and we overhauled the platform now 2 times since then. All of that has been dealt with, right? So, but this again led to something of let's say competitors coming up. Third one, obviously, was BitMEX was the first venue to go to full KYC, hardly known to the broader space. So Founders started in 2019 when there was no regulation, there were no requirements. They already said we want to do this, and BitMEX finished basically in 2020 KYCing all traders. So you cannot trade on BitMEX if you're not KYC. There are no de minimis thresholds. There are no exceptions. No nothing. It's quasi. I mean, I come from banking. A bank-like KYC process, right? And this is like gold-plated for everyone. There is no exception, no country where it's not the case, etc., etc. Which actually lets you ending up in a space where some of the customers and traders say, "Hey, but I don't want to give my data away. I don't want to be identified, right, over and on top of my wallet." I mean, the wallet is always identified. It's different in TradFi, but that they didn't want it. So this is number one. This is what many people are aware of. This is what, like, if you look it up and you try to research it with AI or just classical Google, this is what you get. What is often forgotten that this came together with the rise of new players, right? So the Chinese, especially the Chinese exchanges and the Coinbase as well and Kraken, they copied the so-called market microstructure. So the perpetual swap, the funding mechanism, the wallet side, not so much, but the insurance fund idea, I mean, slightly changed, but they copied it. I mean, we even had players where you saw the documentation having the same typos like our documentation, which is, right? But they were very sure and they were very determined to turn this game from a innovation and from a technical layer to a competitive and distribution channel layer. So where we have been there, Founders solved a tremendous problem in the crypto space. And this is why they become number one, because there was no competition. Once there was competition and this turned into something like an open source know-how, the competition was on for channels, right? For distribution channels. How do I get retailers? How do I incentivize KOLs, influencers, all of that stuff, right? This was, I would call it, invented in a way by especially the Chinese exchanges. They did a tremendous job in playing with those distribution channels, right? Then we had later on, I mean, the cycles are so short, right? Then you had the decentralized exchanges who basically after, hey, we take the same product, we copy it, but we do it without KYC. I always exaggerate. There is more to it, right? I mean, than Uniswap, than Hyperliquid now. They are slightly different. So, and this leads to the fact that, okay, why was BitMEX invented, I would say? Why was it founded? It was founded to provide a place for professional and legitimate and consistent traders to position, let's say, their bets. And it's like one part is hedging against price risk. The other part is even, you can call it, I mean, for me, it's nothing bad, like speculate, right? But always secure, safe, rules-based. So within our workings, there is no tampering around with, and on a neutral basis. right? So we don't trade against our customers. If you go to liquidation, we don't take cut out of this. Our insurance fund works rules-based, which, for example, on October 10th, 11, when we had it wasn't a real crash, frankly, from my point of view, but when we had the high volatility events, we had the least amount of liquidations and the least amount of auto-deleveraging compared in the whole industry. Why? Because our model works that way. It was designed to take care of it. It gives you a sideways market or in a continuous upwards market, you actually pay a price for something that you don't use. It's only relevant once you have those events, right? So this all together, so technology was copied, and I don't mean that in a bad way. It was just taken over, which is better for the whole market. The market now works way better than 10 years ago, right? Which is good for everyone. Number two, the change from being a technology play to going to being a distribution channel play in competition. And then the third one, this going together with new incentives and new structures, leading to the fact that our offering is actually for nowadays, I would say like maybe 10% of the market, right? So this is our addressable market: professional, consistent, legitimate, that trade regularly, that try to make a living from trading, right? So people who log in every day. Not like I buy a Bitcoin, I hodl, or a fraction is Satoshi and I hodl it. This is not what we are after, which are the Binances, the OKXs, the Coinbases of this world. They are after those guys, and that is fine. It's just a normal maturation or maturity of the market is bigger now. And we want to stay true to what we are. So now going back, and sorry for the lengthy monologue, this all happened in the timeline between 2019 and 2020, 2021, basically, within less than 3 years. But in those 3 years, the belief was still, okay, let's do this universal bank play as well, right? So let's be a custodian, let's be a spot market, let's be an academy, let's do something social. So the company going from basically when even in 2018, I think it was roughly 120 or 130, 140 people.
Wow.
And it went from there to 2021. That was the height. 2021, end of 2021, beginning of 2022, BitMEX had around 400 people, even way lower than many of the other big exchanges. 100 people. But we were losing focus.
Yeah.
Right? You have lots of teams pulling in different directions. It doesn't work. And we couldn't stay true to what we believed is our core market. Right? So then crypto winter hit. We had FTX and the other 3 arrows, etc. Not everyone knows it, but a lot of people still remember.
Yeah.
And that led to the fact that the founders, together with the management team, decided, hey, you know what? We are not good at let's do everything. So what is the core of BitMEX? Again, coming back. Right? Serve professional traders who know how to trade derivatives. We serve, on top of it, consistent and regular traders, legitimate traders. Okay. We did this before every other exchange. So we wanted to have a legitimate marketplace. But then looking at the market, it means you cannot address 100% of the market. That's maybe like 10% of it, right? Or maybe even less. But so we have high volumes, but lower number of traders. So we are not measuring our success in millions of signups. You can create millions of accounts. We have millions of accounts, but our metric is daily active traders, which is rather in the area of, let's say 10 to 20,000 on our platform. And we believe there are hardly more than 100,000 globally that we can tap into that fill those requirements, right? And then it's a natural thing if you say, hey, let's stay true to the original mission and vision, creating this professional marketplace.
Yeah.
And then you go back. This was the restructuring that happened basically during 2022. So we moved back. So we were at 400 people. We scaled back everything that's non-derivative or core business. We scaled back our teams heavily to make sure that we have an organizational structure where you have, let's say, quick ways for interaction. Where I would say like everyone knows everyone else. Maybe not everyone, but in a company size of around 100, usually the whole management team knows each other. You work together on a daily basis. There is no need for committees. There's no need for lengthy documentation. You go back to more kind of a startup mode, right? So we said, let's go back to square one, to where we've been before all of this happened in terms of structure. I did together with the team, obviously.
Yeah, sure. Without the team, it's not possible.
Exactly. Yeah. So, and we basically set the reset button.
And I can imagine that was that was exactly that moment where you thought, okay, maybe we don't need to be the number one again, so we have to change the strategy.
Yeah, in this one, it wasn't so much changing the strategy; it was cutting off like all the fuzz, I would say. Right, fuzz would it was fuzzy stuff. Right, so if your main individual contributors, so the high performing team members, if they're all focused on, hey, I'm here for derivatives. Not everyone was from TradFi. We have a couple of very crypto native guys, but I come from crypto. I want to be that venue that does this service for professional traders, being neutral, non-discriminatory. We earn our money only with trading fees. We don't earn on liquidations. We don't earn on liquidating multi-asset margining positions. We don't rehypothecate. So funds that are on our platform are there, and we can pay them out not second, because you need to wait for the blocks, right? But basically any second. So it's not staked. It's not wrapped somewhere. It's just there. So again, this was always the case, but our competitors moved in a different direction. I think that's the fairer representation. It's not that we did something and then we turned around and say, let's do something else. It was more like we did something, we added and added and added. First thing is, we realized this addition is not something that we can well operate and well maintain. That was self-reflection. And number two was our competitors moved in different directions, and we decided not to go with them. But we said, no, we have something we want to do, and this is what true BitMEX is. And this is what we did. So the restructuring was, I would say, 50% really internal, like doing something internally. And 50% was perceived restructuring, because where others moved in certain directions, I would say we stood still. Yeah. Right? It's a little bit like if you're on a hike and you stop for a moment, but everyone else is moving ahead, it looks like you're falling behind. You can say you fall behind for sure, but he can say, well, we're taking a different direction. Yeah. So this is what actually happened. And then we had 2023. So 2022, we had a year that was financially not very successful. 2023, back to profitability. 2024 was actually the more difficult part, where you had the regrowing markets, right? You had more interest. So, and again, we had that situation where, okay, everyone is doing something else. People go into spot ETFs. They go for digital assets treasury. They go for highly regulated businesses. They went to adjacent businesses, like mainly payments on and off ramping, which we don't offer. You can do it with us, but we are not the most efficient, because that's not our. So stuff like this, we had it again, and we're like, no, we stay true to what we are. We needed to change something, because crypto is so fast paced. I come from TradFi consulting, where you have 3 years plans. So you have 3 and 5 years strategic plans. Crypto is like you have a half year.
Was that maybe also a situation where you thought, okay, maybe our competitors faster than we are in that space?
The difficulty is the comparison, right? Our industry, as well as if you, Peter, what you do, like if you're in the VC space, you always do external comparisons, right? And if you compare based on what your competitors are good at, frankly, and we are still catching up in a way, it looks bad, right? You might even lose faith. I never did, because for me, I subscribe to this mission, right? To be this venue for professional, consistent, legitimate traders. I deeply believe that the roots and that the foundation of BitMEX is very sound, right? I mean, again, it's like you cannot make a living out of this, but what happened on 10th and 11th October is actually proving that what we do is correct, right? Because it works in this situation as well. But this is our view, right? I mean, we don't want the industry to have such an event every month. I mean, it would be nice for us, but this is not how it works, right? I mean, this is not aspirable. I mean, for the whole market, I mean. So there is more to it. So 2024 was let's say figuring out where we want to go, and now 2025 we started reinvesting and rescaling, going into, I mean, winning back market share, being more attractive to investors as well. And our themes on that one are just continuous technical development on the backend side for especially institutional players. Like we overhauled the platform. We moved from Irish data centers to Tokyo data centers to use just venue latency for our institutional players and the arbitrageurs and the market makers. We went live with copy trading, which isn't really a big technical innovation, but we do it. We want to rebuild, or our vision is rebuilding or building the passive investment home in crypto. Right? In TradFi, you can buy ETFs, you have index, you have structured products, right? So you can pass
a lot of things. Yeah.
Exactly. In crypto, that doesn't exist. So the only thing that exists are other traders. Right now, it will change. In 10 years, it will look different. But frankly, I mean, either you go into one asset, even index products doesn't make sense. I mean, if you would have a meme coin index, it will change every month, right? So that doesn't work. But you can piggyback. I mean, positively, you can participate from other people's behavior. So copy trading is something that many platforms have, right? But it's more like a one-to-one relationship. We build copy trading. You can have a portfolio. You can say, I like this guy, and I like that guy, and I like this lady, and I like this KOL. And you can follow all of them, and you can allocate parts of your portfolio. So you can do portfolio management, number one. Number two, you can a reverse copy, right? So the Kramer effect, right? Everyone in the debate, I mean, I don't know whether you're into this, but TradFi guys like you watch Kramer and you're like, he's negative alpha. Do exactly the opposite of what he does, and you will earn money. So this reverse, you can do this. And the new stuff that will be rolled out soon is we even allow people to copy traders that are not on BitMEX. So we allow third party or third venue copying, right? Which is a technical innovation. So that you actually can pick and choose. And we believe this is something that is differentiating us for, I mean, not indefinitely because it's competition, but for the next couple of years.
Stephan, let's go back a little bit again to the structure. So you are running a cash flow positive business. So you had a lot of struggles, issue from bootstrapping to growing market to really fast competitors to changing strategy internally and also with business model and all the stuff. So with 92% still owned by the founders, 6% angels, and the other two former employees, and no outside institutional investors in control, right? So that's rare in crypto. What I know, right? So what kind of decisions does that structure let you make that other CEOs cannot do?
I'd say it's not so much the decisions you can take or you cannot take. It's more the attitude, right? Attitude at BitMEX is from my experience. Well, as an ethnical German, so I live in Singapore for long already. But like as an ethnical German, I say BitMEX is run like a mid-sized Swabian company, right? In a positive way. Which means there are short decision-making points. The decisions can be very, well, we are very risk-friendly, but it needs to be thought through. Right? The thing is, our founders, of course, look for KPIs. They own this business. For them, it's an economic thing, right? But way more, they founded the company. They know the space inside out. So the scrutiny is around, have you thought through what you propose?
Yeah.
Hey, you want to do A? Are you really sure? Have you thought about the. And this all happens not via PowerPoint. This doesn't happen via investor reports or some board meetings or so. It's basically on the fly, right? Of course, founders do not run the operational business. They're not involved in day-to-day decisions. We have clear signature policies, so we combine this, right? And we have clear mandates. But every time we need to involve them, we do this, of course, and they own it, right? So it's more or less really an owner's business rather than a financial investment. So to give you an example, if you are a VC funded company, your major KPI from my point of view is actually scale. Everyone knows you're cash flow negative. Everyone knows basically you don't know how to survive the next 3 months.
Exactly. And then you have to raise another round and round and round. Yeah.
So I would say as a management team, at least half of your time is set aside for finding new investors. This we don't have, which is a huge relief. But at the same time, for us, it's, although we are very risk friendly, or we like to take risks, and because it was bootstrapped and it is positive, the viewpoint is, let's not make stupid decisions. Right? So the let's go all in never happened, at least for the time I've been with BitMEX. Never happened. There is no going all in because you have way more to lose than you have to win. This time when everything was all in was when the founders founded the company and bootstrapped. Basically. It was before BitMEX went live. They worked for 3 years, more or less 3 years, basically on this model and how they'd want to do it and testing the market. And if you speak to them, they are open enough. They say they almost failed.
Yeah.
Right? It was more than once the situation that they said, you know what, we won't make it. We have no idea, because they didn't want to take money and they wanted to stay in control. They wanted to do their own thing. And they needed to fund it out of their own pockets, fully bootstrapped. In the beginning, with one early stage angel seed investor, right? And this is why they always kept it like this. The benefit is that we have a clear governance, right? So our cap table is very clearly defined. So there is a clear decision-making body, and there's clear direction. So, and they work together well, which is another one, which is sometimes not the case. I've never seen 3 founders that are so different personality working so well together. Even if they have conflicts, they settle it between themselves and they issue a clear guidance to us as a firm and as us as management, executive management. So we are drawn into their decision making, let's say, processes, which is good as well. So, but at the same time, as I would say, if you have a VC funded cap table or a VC cap table, you usually have more opportunity to go all in more often, right? Because they say, hey, you're cash flow negative anyway, so just try something. For us, it's more like, hey, we still have a position to defend, so don't, right.
And as we already know that the company is bootstrapped without institutional investors. So BitMEX does not do huge traditional marketing. So no hype, no fake volume, no clickbaiting, but you still pull in 80 million in revenue. So what's the whole secret? So
I think the real secret, there is no secret. This is the boring side of things. The secret is that the core I spoke about earlier is valid. That's it. So the feedback we get from especially institutional traders on our platform is, guys, you're one of the more boring platforms. There's no pump and dump. You don't even give us the latest meme coins to trade. Right? But for the top 10 coins, you're a venue where we know the open interest is real. The volume is real. There is no wash trading. We know all traders. I mean, yes, of course, you have some issues once in a while, but your trader community is legitimate. They are tested, right? So we know if prices go up, your price recovery mechanism is undisturbed, right? Your mark pricing, we don't mark price our derivatives to our own books. Sorry, we always have external mark pricing. I mean, this is now very technical already. The insurance fund works on a rules-based basis, which means we can pre-calculate what happens in a market move, right? This is what they really treasure, I would say. There are, you could call it fanboys, and they are pretty big in the market. Right? Then we have this security part and transparency part. We provide full transparency about our books and records, although we don't need to do it, right? Why? Because we think it's worth doing, right? I think all of this together is a core. So it comes back to purpose. It comes back to vision and mission. That might even change. And depending on market situation, it's more attractive and less attractive. Again, now I speak with full confidence because we have proven again that it's correct. We had the same issue in the crypto winter. People actually flocked into BitMEX because they knew, hey, at least with you guys, because of the consistency of then already almost 10 years, we trust you and your wallet structure. We trust your security protocols. We trust that you don't misappropriate our funds, right? So we park the money there. We don't want to be a custodian. Don't get me wrong. It's not the point. Or, hey, in a market situation like 2 weeks ago, they went in and said, hey, if there is something to be, let's say, money to be made, your money is real. We won't wake up the next morning and everything is gone. I mean, not like fraud. This is not what I speak about. It's like you don't stop doing business, right? You just pull through whatever it means, and if it means you need to deplete your insurance fund, you will do so, and we did so, right? So this is what they like. So, but in an early bull market, it's like no one cares. No, everyone's like, hey, why don't I get zero fees trading? Why don't I get the money for trading on your venue, right? Why don't you offer staking for my unused collateral? Why don't you just take a cut out of liquidations because there are so low liquidations? And we're like, no, we don't want this. Right? And again, it depends on which market situation you're in. As I said, 2024 was not a bad time for us, but it was way more difficult than now. Now it's an easy time. We like it. We love it. You can capitalize on it. But 2024 was way more difficult for us because we don't compete by of course we compete, but not by 100% head to head with OKX, KuCoin, Bybit, BitGet, MEXC, etc. Right? Who have very retail based, very like launchpad based. It's not a bad business model. Actually, we just multiple times should we adopt this, right? And we're like, a different business model. It works completely different. It's not just on trading. It's a mixture of marketing and trading. And even a VC business in itself, we don't want to do this. Let's concentrate on our niche, right? And this is what we do. I would say this is the secret sauce, and then always coming back to it, right? So of course we experiment. We do something here. We do something there. We try to get out of it. And is there something new? And then saying, okay, it's something new. Let's leverage and let's scale. Or doesn't work for us. Let's go back. And I think this is the secret sauce, together with the clear decision making structure with our board. So I believe that is true. I mean, our founders, as I said, they are not involved in daily management, but they are crypto native. They know this space, and the decision making processes are short, extremely short. I mean, I worked in corporate, big, small companies before. It's
you cannot compare that. And that means all in all, you are in a unique spot with the company. So comparable with between a Series C and a pre-IPO position. What kind of strategic options are on the table now for BitMEX?
I mean, it's not an open question, but the question that we are debating is, and constantly, I mean, this is management. How do we play this next year and the year thereafter? I mean, I wouldn't look further than end of 2026, beginning of 27. in crypto. Still, I mean, we have lower volatility environments. It's approaching more like a TradFi model, but we are not there. And the thing is the following: we can either capitalize on what we do and focus on efficiency, and say, hey, let's make the biggest profit out of the revenues we can generate, which is a strategy. But that means less investment, less competitive behavior, right? Or we say, you know what? Let's go, I mean, not all in, but let's invest more and make sure we win back market share to A, get through the next crypto winter, and B, if the next crypto bull, I mean, already looking ahead, the next bull run comes,
sure.
we really are, let's say, top 5, top 6 again. Even discussing matters like, shall we go back to the US market now that it's more open, right? We are not touching the US markets. I mean, we haven't for 4 years. This is basically the directional thing. So if you go for profitability and efficiency, you can. I mean, I'm very easy on that one, and I don't mean that judging. You can make a quick buck now, but usually, and we have that at BitMEX, it's a little bit at the expense of the future. It's a little bit like if you don't keep up with the competition, which is always inefficient, frankly. It's always a lot of work, and you don't know what you will get back to it from it. But usually, you lose edge, right? And it's not about technological cleanup and maintenance. It's really like, how do you position yourself? What do you invest into? How much do you try and earn? Usually innovation is costly. Innovation is totally inefficient. It's often forgotten to propagate. Innovation is inherently inefficient because it's a numbers thing. You try 100 things, one flies, 99 doesn't fly. And if you don't get to the 100, I mean, you just lost money. Right?
Yeah.
So for doing this, it's good now, but it might be not so good in a year's time. Or do we invest our operating cash flows, right? Do we reinvest in the hope, I would say, for bigger market share? So investment is always the payout in T0 and an expected return in T1 or T2. This is it. As easy as it sounds, this is the juncture we're in at now, and where we probably take a decision until the end of the year. But the discussions we have, shall we invest more or shall we harvest what we have? That's it.
But let's not talk about if you will go public. But what a public-ready crypto exchange should look like in 2026. So what needs to be built or cleaned up first?
I think, I mean, any crypto, I mean, not platform, because there are different platforms, right? I mean, if you're a lending platform, totally different business. But if you're a crypto exchange and you want to go public, certain things need to be ready from my point of view. Which most of those we tick the box. So you need to be audited. You need to have clean books and records. You need to operate and have a business model that lets you operate in a neutral way, meaning you're a true peer-to-peer exchange, not a CFD broker model, not an OTC broker model that has something in Europe, you call that a multilateral trading facility on top of it, right? Just to show some official numbers and go for best execution. But I mean, I would say, as we do, being a truly independent trading bank, number one. With all the books and records, with everything cleaned up, right? With transparency and so on and so on. But this is just the foundational layer. Without this, I mean, you can try, you can spec, you can go public, and maybe there is interest to it in a formal environment, but you will crumble the moment this hype is over. So if you don't have the foundation, and you need to have a technological clean foundation, so your tech stack needs to work, right? So, but this is just the foundation. Number two, an IPO is successful in two ways. Number one is everything looks at a hype and wants to participate, and it's more I mean, some people don't like me for this, and I don't mean in a bad way, but it's more like the VC thing. There is a hot thing, and you cannot afford to lose out on it. then you can go public with anything. You just need to have the right buzzword. It was like internet, like way back. I still remember the .com bubble, the neue Markt in Then it's like AI, right? It's like the Internet of Things was something like this, right? So it's always like you need to have the right buzzword.
Yeah.
Okay, fine. But this is only short-lived, like a pump and dump cycle. Again, you might end up with a listing that only costs money and limits you in terms of what you can do, in terms of free decision making and risk taking. So nice now as an exit liquidity strategy, but maybe not for the company itself. But the real thing is, if you have the foundation as a crypto or as a venue, and then you have, which goes back to the discussion we have internally, you have the potential to really scale things. Actually, for me, a long time successful IPO, long time means like for a couple of years. You need to have capital requirements. Like you need to have a business model and an idea where investors say, you know what, I believe the management team, more or less, right? Maybe he changed the management team.
Yeah.
Let's say roughly stable management team. They know what they do, and they have a plan. They have an ambition to grow like multiple times. But what do they need for it? They need money for it, and money now. It's investment thing. Yeah. Be it for marketing, be it for tech building, right? Be it for having more people that can do then sales and marketing, all of that stuff. Yeah. And it's credible. Then it's really successful. So you need to have built the foundational layer already, from my point of view. You cannot start with zero. And you need to have a real need for funds. Then you need to have, of course, the team that will deliver on it. Then you can have a long time, multiple years, successful going public strategy. Yeah. With continuously, I mean, you always have this, but continuously rising share prices. But this is a general thing in IPO market. It's always the same. Go IPO without the foundation or without the team that can deliver. You might capitalize on FOMO and on hype and on buzzwords, right? Or if you have this, but you don't have a real capital need, why should I invest? Yeah. Right? Then it's more about exit liquidity, which is, it's not a bad thing. I mean, if you have founded a company and you want to exit because you move on, you do something new, there is nothing bad about finding someone who buys it, but the buyer needs to see, where's my potential, right? So I'm paying old people on the cap table for investors. I'm new, so what do I add? Which is more for the private market. But in the private market, the question is, what do they need money for, and what can I add as an investor to this operationally, right? So what's my, please always add something, right? So they know something. It's the same thing, right? But again, coming back, you need to have the foundation, and you need to have a growth plan that's credible and where the management team can deliver on, and you need to have a need for capital.
Yeah. And that leads to my next question. So BitMEX is still very Asia heavy. So what's the different about your trader base there? And because you mentioned the US market or maybe the Middle East market. So what's the difference here?
Multiple things, I would say. And I mean, depending on who listens to the podcast, this will be the interest. Some people say, yeah, I got it. Others will, huh? So in Europe and in the US, to a certain extent, slightly different. But in Europe, let's start with Europe. In Europe, the crypto and the Bitcoin thing, from my point of view, is to the largest extent a play of there is a new asset class in town, I want to invest in. That's it. Maybe I want to trade. So investing versus trading, we can go into this detail, but it's slightly different, but I want to invest into it. So it's like, frankly, if you would put me back into Europe, you would say it's someone like Stephan between, I mean, it starts earlier these days, but usually between 30 and 50, maybe 55. There are savings already, and this lady wants to diversify. There are, maybe you have already real estate, you have stocks, you have bonds, whatever you have in your savings. And you say, you know what, I want to have an uncorrelated, in quotation marks, uncorrelated asset. and I want to take risks. So I allocate like 5 or 10% maybe of my net worth into this new thing. I mean, it's not so new anymore, but I invested into this.
Mm.
It's interesting for the whole market because Europeans have a lot of savings. I mean, forget about all the narratives and stuff, but there is a lot of money in international comparisons. And they can afford to invest this even long term.
Yeah.
Right? So a very attractive market. Hardly anyone in Europe invests into crypto for ideologic reasons or really to use it.
Mm-hmm.
Why?
Mm-hmm.
The most overbanked part of this globe. I mean, European bank accounts don't work perfectly, but they work pretty solidly. If you compare to the rest of the world. The other spots in the world are like Singapore, Japan, South Korea. Then it stops already there. I mean, I have been globally active in my previous career. This is what brought me actually into digital assets, right? Because I saw how it's somewhere else. In the US, it's for me a mixture. It's a mixture of this investment scheme, and they even have more money to, let's say, it's not playing, but to invest on a per capita basis.
Mm-hmm.
And there is a layer to it that's real adoption. They really use it for transfer of value between themselves, right? It's a network thing. To do remittances, to actually bank themselves, because the banking sector in the US, and I know many people don't like it, it's not close to the European one.
Mm.
From a retail perspective, right? It's a nightmare. They still use checks to pay their rents. I mean, sorry.
Yeah.
Still the case. And you have money vanishing into nowhere for 2 weeks sometimes.
Yeah, exactly right. Yeah.
Even on security settlement, it's a different ball game. This is why the US now adopts the blockchain technology so heavily, because they will use it to rework their backend infrastructure, not so much for retail.
Mm.
So they even like the tokenized stocks idea. They like real world assets because it's way easier for a crypto native in the US to buy the exposure via crypto than getting a securities brokerage account. In Europe, this is still like, So this is there. Now Asia. Asia has this population too.
Mm-hmm.
I would say it's, if you take away the crazy rich Asians, less money on per capita basis, but they use it more regularly. Why? If you leave those islands, a really true island like Singapore or Japan or South Korea, Australia, New Zealand, you don't have a functioning banking system. I mean, it works. Don't get me wrong. I don't want to offend someone here. So it works at a different level. So up to 50% of the population, even in Southeast Asia, do not have bank accounts. Let alone securities. Yeah, let alone securities. Right, it fluctuates. It depends on, some countries are a little bit higher. They have maybe 6, so 2/3 have access to bank accounts. Others have less than half, like 1/3. And the reason is because they lack the funds to basically qualify for a bank account, or they don't have identity documents that are good enough. And you cannot solve this like in a couple of weeks or so.
Yeah.
But they all have mobile devices. They all have computers and all of that stuff. So this is why Asia is more diverse than Europe, which is something I always like to remind people in Europe. If you say, yeah, those Europeans, you have, oh no, the Germans are different than the Spanish, and the Italians are different than the Norway guy, and you're like, Asia is way bigger than Europe, rapidly and even culturally. Let's call them Asians. So, but in Asia, you have this very, I would say, crypto native crowd. The guy, like the 20 to 35-year-old, and even the younger ones, they're really crypto native. It is more likely that they have a crypto wallet than that they have a securities account in their bank.
Okay.
And they use it even to bank themselves. They use crypto credit cards. They use crypto for remittances. So that means from Bitcoin to stable coins, everything. Right? So, for example, South Koreans love Ripple to do international payments. As a European, you're like, what? I don't get it. The moment in time in South Korea, you get it. And I like speaking about this, but it's going too deep into the detail.
Yeah, sure.
Well, Asia is a really crypto native market. So everything about RWA, if you say, hey, I can make US stock exposure or available to even retailers over here, they happily take it. Because it's easier than going through the classic channels. It's really a UI, a user experience and user journey thing, right?
Yeah.
So, or stable coins, interest-bearing stable coins. It's a hot topic, but actually it's not about stable coins. Stable coins are, I mean, there is a guy out there, Anton Golub, he lives in Dubai, he does a lot of influencing, and he's a great guy actually, and he got it right. Stable coins as such are not a retail thing. Hardly anyone pays with them, right? But with the new stable coins coming, it's more tokenized treasury. They are interest bearing. They pay out interest, right? So it's more this why they want to hold them to get the interest payment, right? Instead of buying a US Treasury via a securities brokerage account that they cannot open, right? So the Asian crowd is crypto native. They embrace it's not about the technology. They embrace the utility they get from it and still growing. So this is the difference. So you have lesser, let's say, volume per capita, but you have way more people being exposed to it from my point of view. I mean, there are other, there are statistics out there. I don't know what the real numbers are, like how many percentage of people in, for example, Western Europe hold crypto. It's a pretty high number. If you compare it to Asia, it's not that it's not that they're worlds apart. But I believe that the ones here really embrace it, where they're like, okay, I'll have 50 euro somewhere.
Yeah.
Right? It's like, yeah, okay, you're a crypto holder, but frankly, that's less than I have in Pokemon cards. So it doesn't count, right? It's nice that you have an account, but it doesn't count, especially not for people like us. And then you have a second thing, which is way different. Asians are interestingly, and again, it's not like every Asian is the same. You need to go basically ethnic by ethnic. They are very different. But they are rather risk takers. They are forward. They ask, what can I gain instead of what can I lose? So, which makes them more attracted to offerings like ours, frankly. It's not that they don't know. It's not that they are gamblers or that they are reckless. They know exactly what risks they take. Interestingly, I mean, I need to adapt to this as a Western European guy. They are completely cognizant of the risks they take, but they're like, that's okay. I'm scaling it according to my needs, and the needs are just different than they are.
Stephan, great insight. Very, very deep, and it's interesting that you mentioned Anton, because I know him personally. I met him a few years ago in Kitzbühel in Austria on an event. So he's definitely someone who knows exactly also the market. And you have mentioned public trading innovations. You have mentioned the market. You compared the market. So thank you so much for all these insights. So now it's time for a funny thing in the podcast. So the exit or die rapid fire. So it's a quick fire round. 5 questions from my side, and you give me your gut answer. Okay. The number one is one word to describe the crypto industry in 2025.
Professionalized.
The second one is the most overrated exchange feature.
Peer-to-peer payments.
Number 3, the most underrated region in crypto right now.
South America.
Maybe Colombia.
Not only.
What's the biggest strength today of BitMEX?
Our neutrality.
And one founder trait you admire most?
Determination.
Perfect. Yeah, thank you, Stephan. I have one last question. So for our audience and for the other crypto founders and fintech founders, if you could leave a note on every crypto founder's screen before they launch a product, what would it say?
Never give up. Devotion. I mean, I believe that's a myth. Maybe there are one or two people who had an idea and it worked the first time. But usually you need to rework your idea. You need to stay true to what you actually wanted to deliver. And then don't give up. Just don't give up. I mean, don't kill yourself, but don't give up. That's the thing. I mean, that keeps you going.
Yeah. Maybe also consistency is key, because when we look back to your journey, so
Yes.
not giving up and consistency is key. And yeah, Stephan, thank you so much for all these great insights. Really professional, a lot of enthusiasm, highly motivated. Thank you so much. And yeah, unfortunately, that's it for this episode of Exit or Die. So really massive thanks to you, Stephan, for the no spin real world perspective from the front lines of crypto. And yeah, in my thoughts, crypto is not dead, but the crypto hype, I think, is dead, right? So and what's left standing is like BitMEX might just be stronger than ever, right? So Stephan, thank you so much, and all the best to Singapore.
Thank you, Peter. It was a pleasure. Speak to you soon.
Yeah, thank you.